Foreign Earned Income Exclusion, or FEIE, is a valuable tax benefit designed specifically for Americans living and working abroad. This provision allows eligible U.S. citizens and resident aliens to exclude a significant portion of their foreign earnings from U.S. federal income tax. Understanding this exclusion can lead to substantial tax savings for those working overseas while maintaining their U.S. citizenship. FEIE is a tax provision established under Internal Revenue Service Code Section 911. It allows qualified individuals to exclude foreign earned income from their U.S. federal income tax obligations. Essentially, this means that money earned while working abroad may not be subject to U.S. income tax, significantly reducing or even eliminating the tax burden on overseas earnings. This exclusion recognizes that Americans working abroad often face unique financial situations and may already be paying taxes in their host countries. For the current tax year, the maximum exclusion amount is $126,500. This means qualified individuals can exclude up to this amount from their taxable income. It's important to note that this amount adjusts annually for inflation, so the limit increases slightly each year. Additionally, if both spouses work abroad and both meet the qualification requirements, each spouse can claim the exclusion separately, potentially doubling the tax benefit for married couples. To qualify for the Foreign Earned Income Exclusion, 3 key requirements must be met. First, you must be either a U.S. citizen or a resident alien who maintains U.S. tax filing status. Second, your tax home, which is your primary place of business or employment, must be located in a foreign country outside the United States. Third, you must satisfy one of 2 residence tests, either the physical presence test or the Bona Fide residence test. Meeting all 3 requirements ensures eligibility for this valuable tax benefit. The physical presence test is the first of 2 ways to qualify for FEIE. To meet this test, you must be physically present in a foreign country for at least 330 full days during any 12-month period. These days don't need to be consecutive, giving you flexibility in your travel schedule. However, it's important to understand that time spent traveling over international waters, such as flights between countries, does not count toward the 330-day requirement. This test is often preferred by those who travel frequently or work on short-term international assignments. The Bona Fide residence test is the second qualifying option for FEIE. This test requires you to be a bona fide resident of a foreign country for an entire tax year, which runs from January 1st through December 31st. To establish bona fide residence, you must demonstrate that you've established a permanent residence in the foreign country and that you intend to remain there indefinitely, not just temporarily. This test is typically better suited for individuals who have relocated abroad for long-term employment or those who have made a foreign country their primary home. Claiming the Foreign Earned Income Exclusion involves 3 important steps. First, you must complete and file Form 2555, which is specifically designed for this exclusion, and attach it to your U.S. tax return. Second, you need to report all foreign income you earned, including wages, salaries, and self-employment income from your work abroad. Third, you must choose which qualifying test you're using, either the physical presence test or the Bona Fide residence test, and provide the required documentation to support your claim. Filing Form 2555 is mandatory to claim this exclusion, even if you owe no U.S. taxes. Let's recap the essential points about the Foreign Earned Income Exclusion. You can exclude up to $126,500 in foreign earned income from U.S. federal taxation. To qualify, you must meet either the physical presence test or the Bona Fide residence test, along with the other eligibility requirements. Remember to file Form 2555 with your annual tax return to claim this exclusion. This provision offers significant tax savings for Americans working abroad, potentially saving thousands of dollars annually. Because tax situations can be complex, especially when dealing with international income, it's highly recommended to consult with a qualified tax professional who specializes in expatriate taxation to ensure you maximize your benefits and remain compliant with all U.S. tax laws.
If you like this video, hit that like button and don't forget to subscribe. Visit codelucky.com for more such useful content.